Hello there. While gold is still consolidating, let's review some of my favorite metals, including copper, which we looked at with the members at myfinancesteacher.org a couple of days ago. So for more regular and detailed updates, make sure to join us. In addition to copper, we'll have a look at gold, of course, and another metal that I like and I've mentioned many times to the members at myfinancesteacher.org is, of course, nickel. From time to time, I do also write very detailed, extensive nickel reports. Those are the best you can find on the internet. Again, for that, join us at myfinancesteacher.org. For gold, we are still trying to find an intermediate cycle low in gold. The first daily cycle was very long, but looking at the whole intermediate cycle, it's only 120 days long for now. So while there is a minute chance that we've seen the intermediate cycle low at the end of June, meaning that gold will just shoot up from here into the rally of a new intermediate cycle, the chances for that, as I said, are minute. The question is instead whether that end of the June low was the daily cycle low, or gold is going to give us another recognizable daily cycle low, perhaps a bit of a push higher into this neck and shoulders formation that will be the third daily cycle of the ongoing intermediate cycle, followed by a recognizable intermediate cycle low, bring us closer to that 200-day moving average, or at least a bit of a longer sideways consolidation before the start of a new intermediate cycle, perhaps into that late summer and into September. That's when the Fed is now expected to decrease Fed funds rate. Looking at RSI, we see that the lowest we've seen recently was only 42.5. It isn't really low enough for a usual intermediate cycle low in gold. We see that usually RSI drops below the level of 40 and often below the level of 30 to accompany those intermediate cycle lows. So a couple of words on gold is basically caution and patience. Moving on to copper, which is getting interesting recently. While copper was rising over here into May, I did decrease my allocation into FCX and SCCO if I remember correctly, but I didn't make any trades on some of the more interesting copper miners, such as the Lundin company. I do like that one. So in the short to medium term, with this decline in copper price, I do plan to repurchase back some of my positions, as in the longer term, I think copper has an outstanding potential. Look at this sort of a huge cup and handle formation that's been broken. We have a bit of a retest before continuation higher. And statistically, these cup and handle formations usually test the depth of this cup on the upside. So if you bring this height, say, to the level of the breakout, a measured target would be somewhere around $6.50 on copper. But that's in the longer term. As I mentioned, in the shorter to intermediate term, I'm still waiting for a recognizable cycle low on copper. Zooming out, looking at this green line at the RSI part of the chart, we see that most cycle lows do come with RSI dropping below at least that level of 40. We're getting close, but we haven't crossed below that line yet. And looking at the Bollinger Bands, we see a small poke a few days ago. Usually cycle lows follow at least a couple of pokes below those Bollinger Bands. So repeated pokes here, perhaps as copper tests this 62% Fibonacci retracement and this support resistance zone around $4.2 based on a couple of peaks on your chart. So that is a likely target for this cycle low. If that's broken, we'll have to look at what happens as price reaches the 200-day moving average. But generally, briefly on copper, patience while we are waiting for this buying opportunity into the rally of a new cycle. Lastly, moving on to nickel. Nickel cycles usually last for 155 days. That's at least since the middle of 2017. But the cycle duration can actually change quite a lot. Within this period, the shortest has been 78 days and the longest over here lasted for a whole 278 days. Of course, the way you identify these cycles is somewhat subjective, but at least that's my view of it. Zooming in over here, recently these cycles on nickel were kind of difficult to identify. We see sort of a triple low all around the end of 2023, early 2024, any of these lows might be counted as a cycle low. Perhaps this understanding of the cycles, as you see on the chart, is a bit more palatable to me. That gives us a cycle that is still relatively short at only 78 days, but again, we might have a short cycle, and nickel is clearly dropping down into that cycle low. We've seen a bit of a poke below the Bollinger Bands. Bollinger Bands are already quite wide, so any repeated poke over here might actually precede the cycle low. And looking at RSI, it's already at 34.3, pretty close to being oversold. So while I do have a sizable position on nickel, I think in the long term it has a wonderful opportunity. In the shorter term though, I'm really looking forward to add to those positions, and I think that's going to happen relatively soon. That is all for now. Gold, copper and nickel, those are pretty interesting to me. For much more detailed and regular updates on a range of assets, make sure to join us at myfinancesteacher.org. To do that, scroll down a little and click this Join Now button. Have a tremendous Thursday. Bye-bye.